Hello and welcome. You're watching MF Corner. I am Sumaira Abidi. Now, a lot of you may be aware, and in fact, many people have been asking questions about what's the way forward for the Franklin Templeton case. Now, you may be aware that, SBI Mutual Fund was asked by the Supreme Court to give out the first tranche of payment that's close to about 9,100 crores. Well, most of it has been done earlier this week. And subsequently, what happened was that the Supreme Court has now asked them, that's SBI Mutual Fund, to also undertake the liquidation, the winding up of these 6 schemes, and also distribute those proceeds to the unit holders, right? So how will things move from here? Everybody wants to know, how soon am I going to get my money? Well, we'll try and answer as many questions as we can. So we have 2 guests joining in today, and let me welcome both of them. Gentlemen, good afternoon to you. We have Mr. Singh, who's the Chief Business Officer at SBI Mutual Fund, and we have Feroze Azeez, Deputy CEO at AnandRathi Private Wealth Management. So thanks very much. Mr. Singh, naturally, first few questions are to you. I understand that you may not be able to, give away too much because also, Supreme Court has some say in how things will proceed from here, I understand. But, what is the initial talks about how this whole system will work? What is the standard operating procedure? And secondly, what is going to be the division of duties between SBI, MF and Franklin? I understand that, back channel talks are on. So anything you can tell us about how this is going to work out?
Yeah, thank you, Sumaira. First thing first, as you talked about, the Supreme Court has given this responsibility to SBI Mutual Fund to undertake the liquidation of the assets. So assets were in 2 parts, one in the shape of securities and the other was in the shape of cash, which was available in the scheme. So the first order was for distributing the cash, for which we filed SOP with Supreme Court of India, and which was approved. And accordingly, we have paid the money to the unit holders, and most of the money has gone, and only a small portion, very small portion is pending for some compliance issues, which will also be paid very soon. Now, on the second part, again, we got the second order for liquidation of assets. So, for which we are going to file an SOP with the Supreme Court of India very soon, and once that is approved. And then we'll go ahead with the whatever we are contemplating to do with assets. But I want to tell here that some of the assets are really, we feel that we'll be able to liquidate it very, very quickly.
Okay. Now, I'm not going to, presume, how soon Supreme Court can, return with an answer for you. Therefore, I'm going to ask you, what is the initial assessment of, what is the saleable bonds? I mean, how much can be easily sold? Because, some schemes already have generated further cash since you paid out that 9,100 crores, right? There's some 750 crores on. So that aside, the assets which are in those schemes, how much you think can be sold, say, first month, third month, 6th month?
No, see, there are 2 parts of it. What we are going to propose, and subject to the approval by Supreme Court of India, we are going to color code the remaining assets. Whatever is immediately sellable, where there are quite a good number. I mean, if I put it in a percentage term, we think it's around 40 to 50% of the assets, which we feel that we'll be able to find the good buyer for them without any discount or any haircut. And that is something which we should be doing. That will be the first priority, to optimize the returns for the unit holders and do it as quickly as possible. So once we get the go-ahead from Supreme Court of India, we'll do that. We'll color code the whole portfolio and we'll try to sell it at the earliest. And in tranches, as directed by Supreme Court of India, whenever we get the liquidity in the account, so we'll disburse that much amount, and remaining when a particular amount is encashed, then we'll be doing it on an ongoing basis.
Okay, I'll come to this point of disbursal in a bit, but I know you're bound by not saying or giving out more granular details till you hear from the Supreme Court. So therefore, let me bring in Feroze, who has no such compulsions. Feroze, you've done an assessment also of all the schemes, right? So can you give us an idea of which schemes are pretty much out of the woods in terms of, which have the most number of these saleable bonds, and where might investors still find the going tough?
I think, Sumaira, like you said, that there is a lot of money which can get liquidated, like Mr. Singh said as well. But if you look at the natural maturities in this calendar year, for two schemes, ultra short bond fund and the low duration fund, the liquidity is going to be relatively easy. That's what I'll assume. I'm sure the specifics with respect to color code, which I think was something which Mr. Singh pointed out, is going to be very interesting to see. But natural maturities and the cash which has come subsequently for these two schemes is 65 for the ultra short bond fund and about 42 for the low duration fund. So these are the ones which I would assume are easily liquidatable, and the rest of the bonds should be sellable in due course, relatively easier. I think the one which is the one which has the largest maturity or modified duration, which is the income opportunities fund, that's going to have its difficulty to liquidate in entirety. But I'm very confident, given the mandate to SBI to facilitate this, given their scale, size, and capability, it should be relatively easier to find buyers without haircuts.
And income opportunity is the one which is currently not cash positive as well, right? You're expected to turn cash positive soon. And, you know, I mean, since you've studied these maturities, what is the assessment of how much money can come back and by when?
See, I think they are today negative about 1.25% in terms of cash, or 1.5%. If you just look at the maturities of this calendar year, that is 2021, we are looking at about 8-9% of the portfolio becoming mature. So you would be 7-8% cash positive on two conditions: that nobody defaults, and second, that there is nothing else sold. Then also you will be cash positive about 8% in this calendar year. So both these hypotheses, given these hypotheses, you're looking at about 8% cash in natural course of maturities.
Okay. Mr. Singh, you know, the figure that the Supreme Court has put out about what remains to be sold, liquidated, distributed, etc., is 17,000 crores, right? There have been some reports that actually it is a much higher figure of 22,000 crores if you count the segregated portfolios. But to be fair, the segregated portfolios happened before the winding up in April, right? I mean, that is the date of Jan, etc., which will have a separate set of investors. Therefore, you know, the winding up, the investors who are in the winding up process are separate. So what is your understanding of whether this Supreme Court order will also include, or rather require you to deal with those segregated portfolios? I mean, will you be required to, you know, sort of make the collections on that behalf also?
No. That is not part of the order, and that cannot be, because once the segregated portfolio is there, then the other options are there, the legal actions and so on and so forth, and to going to various judiciary processes or regulatory processes. That's a different ballgame. That is not in our purview, and that will be handled by Franklin Templeton directly.
Okay, and what about this, 750 crores that we had spoken about? I mean, that is the cash which is already available now. In the this week's disbursement, where you gave out 9,100 crores, you couldn't include this because the Supreme Court had given a particular date as a stopgap, right? Now that liquidation has been handed over to SBI MF, therefore it's your call, right, when you choose to give out this money. So how soon can this money be given out, and subsequently will the disbursements be made periodically, or will they be made as and when chunky assets get sold?
No, again, coming back to the same questions, the once Supreme Court approves, but there's 750 crores in any case. Whenever we do the next tranche of disbursement, that will go there. There's no doubt about that. So that money will come, because when Supreme Court ordered the first one, they clearly talked about one particular thing, that the money available in the account as on 15th of Jan. So that was taken into account. So that's how it has been disbursed. But the next tranche, once we liquidate some assets, then along with that, we will send this cash which is available. In any case, this cash is now put in the CDLO and is earning some interest. Because if the portion is very, very small, the execution cost itself become very, very high. So we don't know how much of this is 750 is for which scheme. Once we get that money and once we liquidate some assets, accordingly we'll take a call after the approval of the SOP by Supreme Court of India.
Okay, we're going to take a very quick break, but there are lots more questions that we want to pose to Mr. Singh and Feroze, and we'll do that when we return. Do stay tuned in to MF Corner. Hi, welcome back here with MF Corner, and we're discussing the way forward now for the 6 roundup schemes of Franklin Templeton. With me, I have Mr. DP Singh, who's the Chief Business Officer at SBI Mutual Fund, and Feroze Azeez, who's the Deputy CEO of AnandRathi Private Wealth Management. So we've spoken a little bit about, how things are going to go from here, but there is one contentious issue that remains, and that is the fees that, SBI Mutual Fund will have to charge, because naturally, they're not doing it for free. So, Mr. Singh, has, a number been arrived at? And more importantly, would you be aware of whether it's going to be charged to the scheme?
No decision as of now. As of now, we have just taken the directions of Supreme Court of India and started working on it, but we'll discuss this separately with the organization. No decision and no discussion on this point as of now.
Okay, because, sometime last year when the options available were that, either trustees could liquidate or Deloitte could do it, and, unit holders were asked to vote. I remember quite distinctly that Franklin had agreed to take Deloitte's fees on their books and not charge it to the scheme. So I was wondering if, you might have heard something on that account.
No, nothing as of now. We have not discussed on this issue at all.
Okay. Feroze, is there any bond which is also on your buy list which you think can be absorbed by any of the ongoing schemes?
See, I think from a bond portfolio perspective, I think from SBI analysts, if they have those bonds which they are in their buy list, if they consider buying them, but I think to avoid vested interest, SBI would not bid for those bonds. That's what I'm given to understand. But having said which, the SBI has the capability to identify, and given their size of about 12 lakh odd crore, including the PMS mandates which they have, they should be able to find a third party buyer, if not absorb them in their schemes. Point one. Point two, the research team, I think they have about 6-7 fund managers on the debt side, and about 8 odd credit analysts who have been managing the credit risk fund of SBI, which has been the top performing one in that category. So one is to say that these bonds have a capability of getting absorbed in the existing schemes of the asset management company, point one. I think that will be avoided because of vested interest from a pricing standpoint. But I think the capability on the analyst side and the fund manager side is deep enough, expressed in the form of the stupendous performance. Even in the same category, SBI Credit Risk Fund has been a top performer, and they've not had defaults for the last few years, where several of them have, I think. And I think one thing which you raised, which was very, very pertinent for all Franklin investors at a point in time, was the segregated portion. Quite a few of those segregated units are marked at zero value, but they have an immense amount of value expected. For example, the Vodafone one is expecting a large payout in July, August this year. So I think everybody should take note and make sure they are the demat accounts or in the physical form, and track the payouts which are expected to come in spite of they having a zero value on paper.
No, fair enough. I totally take your point on the segregated, and which is why I wanted to ask, because, some of it will be coming in, and it's a totally different set of investors, right? So, I mean, my own assessment was that SBI MF wouldn't be involved in that. But Mr. Singh, the earlier point that Feroze spoke about, this conflict of interest, how will that be handled?
No, one thing is very clear. The SOP which we are going to fight, we are going to make it very clear that even if we are interested and even if we find that this is a good opportunity for buying the papers, we will not. We have taken a call, because there should not be any perceivable conflict also, not to talk of the real conflict. We will not do anything, because we have to go by the spirit of the Supreme Court of India, which said if they have given something to us, so we have to do the work in all earnest and see how to avoid any charge of any conflict, number one, and number two, how to optimize the returns to the investor at the earliest. So those two are the guiding principles, and we'll be going by that only. And we have taken a call that we will not be bidding for any of the papers which are there, which may be very good paper, but for the purpose of just keeping ourselves clean on this issue, we will not be bidding for that.
Mr. Singh, has SEBI offered any opinion? I mean, have you sorted out since this news that you have been charged by the Supreme Court with the liquidation?
We have been informed.
On the SOP?
You're asking me,
yes,
Sumaira?
sir. Yes.
No, SOP, we are seeking the guidance and blessing of SEBI. But SEBI, as per their mandate, they have been guiding us rightly in the right spirit. What could be the legal position, what should be done, what should not be. So they are guiding us, and we will keep on seeking their guidance for all the times to come also.
Okay. Feroze, one final question to you. After a long wait, these unit holders are seeing money coming in. And the thing is that now the money is going to come in chunky ways, right? I mean, people got 50% of whatever they had invested, say, in the ultra short fund, and another fund they got 60%. So what do they do with these chunky payments that are coming to them? What should be a good investment strategy for them? Because a lot of this would be SIP money, right?
Yes, there could be a large liquidity which comes to an investor. The reinvesting, of course, depends on each individual portfolios. To my mind, if it was debt allocation, ideally it should find its place in the debt allocation, and a person should not get overly excited about the equity returns of the last 1 year and move their assets from debt to equity. But if they should try and make sure that this liquidity which had actually gone out of the window is back again, should be allocated as per the asset allocation. There is a tendency, especially looking at the last 6-8 months rally of almost about 70-80% on Nifty, there will be a tendency to skew it to equity. But I think stick to the asset allocation, point one. Point two, go into schemes on the debt side which don't have a credit risk and also an interest rate risk, given the kind of borrowing which the government is going to be having. So point is that safe debt schemes is what would be the alternative. And if the asset allocation permits some equity allocation, then of course the liquidator can be a beneficiary of the assets which are being liquidated. And there are several schemes which you can invest on the equity side. But I think net-net, I think the most important thing from an investor standpoint is it has been handed over to one of the brands which is synonymous to trust from an India standpoint. So that's great news. Liquidation capability is immense. So it's great news that we'll all get our monies as investors.
Okay, Mr. Singh, just to wind things up, apologies that slipped my mind earlier, but just to put it on record, the tax treatment for the further money that comes in also remains the same as this 9,100 crores?
Yeah, it's going to remain the same because, the units will be extinguished of the equivalent amount. Whatever money will be there, equivalent amount of units will be extinguished, and the money will be paid to the investors.
All right, Mr. Singh, Feroze, thanks very much for joining in and for explaining this. And I'm sure we'll need explanations going ahead as well as in when this liquidation process takes off and of course progresses thereon. Thanks very much at the moment for joining in. All right, so for everybody who had queries, I hope we've been able to provide at least some input, some answers about how things are going to move from here. But the one thing that comes through very, very clearly is that there is going to be no more long, endless wait now for unit holders in these 6 Franklin Templeton schemes. Payments will start getting made and they will be made regularly. And the other thing that Feroze pointed out is that some of the segregated units also, could see payment coming in. So that will be another positive. Thanks very much for watching and do stay tuned in. The team of Closing Bell joins you next with all the market action.
Present